All right, so yesterday we were able to complete the adjusted trial balance as well as complete all four financial statements. So here it is. We have our income statement. Now, this is very, very important that you keep in mind because this income statement is what we are going to match from our books, okay, from here on out. So in this case, the income statement and the statement of equity is going to be the most important things that we are going to be needing to match our books up when we close out our books. And the balance sheet is also going to be also important because if everything pans out great, then this is the easiest way to complete the post-closing trial balance, okay? So again, we did all four financial statements. So now let's go ahead and do the next step, which is step number 9, which is to close out your temporary accounts. Our temporary accounts are also known as our uh, income and our expenses, right? Those close out at the end of a given accounting period because that's a perfect way to measure profitability, right? We understand this because when we close out our revenues, the one thing that we need to understand when we do revenues is that you can never predict what revenues you will have in the future, right? Especially when it comes to having, especially when you open up a new business because you're going to be constantly gaining new customers, you're going to be losing old customers, and so on and so forth, right? You're going to probably send a lot of, marketing materials out for any upcoming sales, right? You may uh, spend more marketing materials, advertising expense to pull in more customers. So therefore, you may have newer customers that will try your product for the first time. You may have some returning customers. They can also buy the same product if they like it, right? But also, you can't predict what they want either because they might want to try something else, try something new. Also, as well as looking at expenses. So, expenses will vary uh, depending on the month or depending on your accounting period, right? If you do it every month, then on a month-to-month basis, you can measure, well, how much expenses am I going to incur? Maybe again, for example, July, right? There's 4th of July, which is a holiday, right? That could be a great opportunity for you to spend some advertising expense. Where in the month of August, right? There's definitely not a holiday in August, so I mean, you could create one. You could say it's a end of the summer sale for whatever reasons that you do have. Maybe August you might not need to spend money on advertising. So in this case, right, on a month-to-month basis or accounting period basis, right, you can never predict how much expenses you can have, right? But of course, you're going to also have your fixed expenses such as rent, right? Rent, you know that you're going to make a payment, the same payment every single month. So that's considered a fixed expense versus a variable expense, okay? But in this case, that is a perfect way that we can measure, right, profitability because we can't predict how much income we can generate, and we won't be able to predict how much expenses will generate. So that's a perfect way to be able to test for profitability. So in this case, what I'm going to do here is I'm going to do this where I'm going to have my journal right here on my left side, and right next to it, I'm going to have my ledger right on. Sorry, the left side is the ledger, the right side's the journal. Okay. I'm going to do this one at a time, and what we're going to do is we're going to close out all of our revenues and close out all of our expenses one at a time. So, by looking at your ledger, let's go ahead and take a look at our revenues, right? The rules to close out your revenues is we're going to be putting it in a special account called the income summary. So, if you look at your equity, right, we have a special account called income summary, right? if you actually just learn this on your own, this is also known as your retained earnings, okay? And what you do with this retained earnings or income summary, right, is your choice. You can this is the account where you choose. Are you going to reinvest into your company, add it into your equity, or are you going to pocket this out as your own money, right? You could do a withdrawal right away from the income summary, right? So in this case, that is what this account is. It is the income summary. So when we close out our revenues out to our income summary, right? What we're going to do here is look at our revenues. My revenues have a normal credit balance. How do you zero out an account? Pretty straightforward, right? If I am on the right side, right? Let's say, for example, the first one we have here is my regular coffee. If I'm on the right side for $1,394.96, how do I make this balance zero? Straightforward. I'm going to debit the account for the same exact amount to get my balance to become zero. Okay? And that's what we're going to do. We're going to basically zero out all of my revenues, zero out all of my cost of goods sold and my operating expenses, because those are all expenses, right? And we're all going to close them out to my income summary. So in this case, in this rule here, we're going to debit all of our revenues and credit them to my income summary. For all my expenses, since they have a debit balance, we're going to credit those expenses and debit them into my income summary. Okay, so let's go ahead and work this out one at a time. So since I'm already right here in my ledger on my left side, what I'm going to do is I'm going to compare each and every single account on here, right? So if I'm going to close this account out to my income summary, right? I've already mentioned that if I currently have a credit balance, I need to debit my account. So in this case, you're going to put the date here, right? And the first account that you see here is going to be my sales for regular coffee, okay? Here you're going to also get the account number and everything. So I'm going to debit this because right now I currently have a credit balance, right? So I'm going to zero this out by, I'm going to debit my sales for regular coffee, right? Account number 40050. And right now I'm going to debit this account for $13.94.96. Okay? $13.94.96. Okay? And since I'm already here on my ledger and my journal at the same time, I'm going to go ahead and close each account at the same time, just so that I can save myself some time and not have to go back and post it to the ledger after my journal, right? I'm going to do it simultaneously. So in this case, I'm going to put close, okay? And this is journal number 24, and I'm going to debit my account for the $13.94.96. So therefore, if I want to debit this, this should bring my account to zero, okay? And I'm going to do that for every single income account that has a credit balance, and those that have, contra accounts. So for example, my sales discount, since those have a debit balance, I just do the opposite, right? I just close it out by crediting that balance, okay? So here's my first one. So my second one is going to be my sales for Supreme Coffee. Okay, which is account number 40100, and I'm going to debit the account for $14.36.40. Okay, 14.36. Oh, I made a typo. $14.36.40. $14.36.40. Okay, So I'm going to also come over here to my ledger, and I'm going to also post it right away for the 1436.40, which should bring my account balance to 0. Okay? So let's see what's next. Okay? Next we have is sales for our ceramic coffee mugs. Okay? Sales ceramic coffee mugs. Okay? Account number 4150. 4150. Okay? And I'm going to debit my account for, so right now I have a current balance of $1763.91. Okay? $1763.91. Okay? And that's going to be for, this is going to close this. And I'm going to say here that I'm going to close it for $1763.91. Okay, $1763.91, which should bring my account balance to 0. Okay. The next account I have here is going to be my sales for the medium regular coffee. Account number 40300. And I'm going to debit my account for $5221.76. So 5221.76. Okay. And I'm going to go ahead and close this out as well for the 5221.76, which should bring my account balance to 0. Okay. The next one I have here is going to be my sales for my large regular coffee. Account number 40350. And I'm going to debit that account for $6503.25. Okay. $6503.25. 6503.25, which should bring my account balance to 0. Okay. Next account I have here is my medium supreme coffee sales. Okay, account number 40450. All right, and my account balance right now is 665577. Okay. Close. 665577 to bring my account balance to 0. Okay. Next I have here is my sales for my large supreme coffee, which is account number 40500, which I need to debit this for 7524.44. 7524.44. Okay. 7524.44, which should bring my account to 0. Okay. Next, I have my sales returns and allowance. This has a debit balance, so I need to credit this account. What I'm going to do is I'm going to skip this for now just because I know I should have a couple more credit accounts. I need to put my debits first. Okay, so I'm going to skip that for now. My sales discount has a debit balance as well, which I need to credit, so I need to skip that for now. Next I have here is delivery income, which has my credit balance. So this is something I need to debit first. So I have some delivery income. Account number 48,000. I need to debit this for $300. Okay. Okay, so now when I debit this, it's going to bring my account balance to 0. Okay. And last account I have here is interest income, so nothing there, so I can go backtrack and then do my last two, which is my sales returns and allowances and my sales discounts. In this case, I need to credit them because they currently have a debit balance. So sales returns and allowances. Okay. Since I have a debit balance of $19.95, I need to credit my account for the 19.96. Okay. So when I credit this for the 19.96, I'm going to put it into my ledger for the 19.96 credit. So that should bring my account to 0. Okay. Last but not least, I need to do my sales discount. So I'm going to credit my sales discount. Which is account number 46,000. Okay. And I need to credit this account for the grand total of $1,979. Okay, $1,979. Okay. So then that, right, when I zero this out, it should give me my account balance to be 0. Okay. So now that I've done that and I've closed out all of my sales, right? So I did every single one. You could double check in case you missed one. So I closed out this, closed out that, closed out this. You could tell definitely because all your accounts should be now down to 0. Okay? And the last thing I need to do is I need to drop this amount into my income summary. Okay? So I need to close it out to my income summary. All right, which is account number 3999. Okay? So now I need to figure out how much I am actually going to put into my income summary. Okay? You could do a quick thing here where you can add up your sum here of your total debits here, and then subtract out whatever credits that you have here to get your ending balance. You could that would be the quickest way to find out. So in this case, I'm just going to go ahead and do an equal sum just so that I know how much money I am dealing with on my debit side. Okay. So in this case, when I select all these accounts here, I get a grand total of $30,800.49. Okay. So if that's how much my total debits is, I need to have an equal and opposite equal credit, right? So in this case, I need to figure out how much money am I going to be crediting my income summary if I have 1996 plus a 1979. How much is that going to give me at the end of the day? So let's go ahead and figure this number out. Now, what I can do here is I can do simple math as well. If I figure out that I have a total of $30,849, and I can subtract out 1996 as well as the 1979 cents, how much is my grand total that I'm going to be putting into my income summary?
$28,879 and 70. Oh, I got 70 cents.
70 cents.
I might have missed a number.
Okay, yeah, you might have missed the 96. Okay. Well, I got this. Now, how can you tell that this is correct? Well, we already have solved for this already, right? We solved for this in our income statement. So let's take a look. Income statement. What was your total sales? Your total sales was 28,579.74, right? You took your total sales and you subtracted out your discount and your returns and allowances, so you should have got this exact number, 28,579.74. And that's exactly what we got in our journal, right? 28,879.74. Wait. I'm off by $300. Give me 1 second. Let's double check this. I'm off by $300. Well, what did you get again? You got the same exact number as me?
Yeah, pretty much. Just at the end, I got 70 cents instead of 74.
Hold on. 30,000. I'm supposed to get for 30,500, not 30,300 or 800. So let me double check this real quick. So let's check our Let's check our ledger real quick to see what numbers we may have mistyped here. Okay. And let's see. We got $13.94. Okay. We have $14.36. We have 1763. We have 52.21. We have 65.03. We have 66.55. And we have the $300. And we have 75.24. And then we have 300, which is, and we have 1996. And then we have 1900. And then we have 300. Huh. Let's double check our adjusted trial balance because I'm off by 300. Okay. Let's see, adjusted trial balance. But then we would have had a discrepancy if we did not get this correct. Oh no. Oh, that's right. Okay, I got it now. So this is correct because in this case, right, this income statement only includes just the sales. We didn't include the $300 down below, right? Down below is when we added that extra $300. Okay, so in this case, you're supposed to get $30,000. Yeah, so in this case, you did solve for it. But this is just because this is without the extra $300 for the delivery income. So 28,879 should be correct. All right. Whew. All right. So in that case, we can go ahead and credit our income summary for the 28,879 and 74 cents. Okay. All right, income summary. Here we are. This we could say we're closing close income or close out revenues. Okay. General Journal 24, and we credited our account for the 28,879 and 74 cents. Okay. Now don't forget, because this is an income summary, which is an equity account, this follows the same rule. It should have a normal credit balance for you to be able to debit the income summary and then credit your equity, okay, when you close it out. So at the end of the day, this should have a credit balance. Okay, so in this case, we start out with 28,879.74. That's exactly how much we should have. Right? And then I'm going to make a note here that we are to close out in our revenues to income summary. Okay? right? So I'm going to tell you this whole section right here is definitely not enough for all of your expenses. So I'm going to have you draw a line here, and we're going to skip on to the very last page in our journal, which is going to be page 25. Okay? Just because right here, it's definitely not enough to cover all of your expenses. So I'm just going to draw a line here because that's definitely a good opportunity to plug in any extra transactions that could be fraudulent. So we're going to start on page 25, and we're going to close out all of our expenses. So our expenses, right, includes our cost of goods sold as well as our operating expenses. So since we're going to be closing them out, right? We know that expenses have currently a debit balance. We need to close them out by crediting all of our expenses. So, because we know for a fact that most of our expenses have a credit balance, that means we're going to be closing it out to our income summary. So my income summary is going to be a debit. Okay? Which is account number 3999. Now in this case, I won't know what my income summary is because I need to calculate my total amount of expenses. So what I'm going to do here is, since I'm crediting all of my expenses, I'm going to go through it one at a time, exactly like how I did my revenues, and I'm going to zero them out one at a time. Starting with the first one is going to be your cost of goods sold. Cost of goods sold for your regular coffee, okay, which is account number 50050. Right, and we're going to credit this account for a total of $1407.68. $1407.68. Okay. And I'm going to go ahead and come over here and close this out. For the 1407.68. So that should bring your account balance to 0. Okay? 1407.68. Next one we have here is going to be our cost of goods sold Supreme Coffee, account number 5100. Okay? And we're going to credit this account for $14.88.55. $14.88.55. And then I'm going to go ahead and just close it out in my ledger right here. Right? So 1488.55. Okay, bring my account down to 0. Then my next account is going to be the cost of goods sold for the ceramic coffee mugs. Which is account number 5150, which should bring my account credit to 1183.84. Okay. And I'm going to close this out right now. For the 1183.84, bring my account balance to 0. Then I have the cost of materials. So here you go. Cost of materials for the medium coffee cups. So cost of materials, medium coffee cups. Account number 51200. I need to credit that account for $286.70. Right? $0. Okay. I also need to do the cost of materials for my large coffee cups. Account number 51250. And I'm going to credit this account for $351.63. $351.63. Okay. Makes my account balance 0. Sugar. Which is account number 51300. And I need to credit this account for $43.20. Okay. Bring my account balance to 0. And then last but not least, for my cost of goods sold section, I have cost of materials for the creamer. Account number 51300. Okay, that should be 350. Okay. And then that is for $359.26. $359.26. To bring my account balance 0. Now, yes, you could have done the cost of goods sold separately, right? Because at the end of the day, you're going to close out your expenses, but because you're going to close out all of your expenses, might as well just list them all in one go. Same thing, because you're going to end up going to the same account anyway. So really, does it really make a difference? Not really. If you choose to, you can make it separate, but then that means you're just going to have to journalize another transaction for the income summary. Okay, but in this case, I'm just going to go ahead and just continue on with this list and close out my operating expenses as well. Okay, starting with the very first one here, we have some advertising expense. Okay, account number 60,000. Okay, and I'm going to credit this account for $185. Okay, bring my account balance to 0. My bank fees, I'm going to close out my bank fees. Account number 6100, and I'm going to credit this for $268.30. $268.30, which should bring my account balance to 0. Okay. Then we have business expenses. We're going to close that out. Okay, account number 6200, and we're going to credit this for $1282.78. Which will bring my account balance to 0. Okay. I'm going to close out my freight expense. In this case, there's nothing to close out because it's already 0. So I can skip on forward. Next I have is my insurance expense. Okay, I got to close out my insurance expense. Account number 6400 for a credit of $195.83. Okay. Next is interest expense. $64.50. Okay, and I'm going to credit this for $101.34. Okay. Okay. Labor expense, I need to close out my subcontractor expense and my temporary worker expense. For $18.90. Okay, so I'm going to close this out. And that should give my account balance 0. Okay, I need to close out my temporary labor expense. $65.20 for $252 even. $252. Okay. I need to close out my license and permit expense. Account number 6600 for $375. Okay. I also need to close out my loss on disposal of asset. Okay. So account number 6700. Okay. And that is for $2,000. Okay. Next I have on the list is office supplies expense. Account number 6750, which is for a total of $70. Brings your account balance to zero. Payroll expenses, so I gotta do my salaries and wages expense. Account number 6810 for a total of $884. Okay. You also got to do your commissions expense. For a total of $411.96. Bring my account down to zero. Okay. Then we have some payroll expense, payroll tax expenses. $68.30 for $97.98. To bring my account balance to zero. Okay. Almost done here. Purchase expense is zeroed out already, so nothing we need to close out there. My purchase returns allowance is also closed out already. And my purchase discount, there's nothing there. And then rent expense. okay, for $1,500. Okay, bring my account down to 0. Okay. We don't have any travel expenses. We don't have any utilities expenses. Bad debt expense. Yes, we need to close that out as well. Okay, for $76.60. Okay. We have some depreciation expense. Okay, for account number 66,000. For $625.95. And then last but not least, our last account in our expenses is our amortization expense. Account number 66,500, which is 1176.67. Okay, bring my account down to 0. Okay, and what I'm going to do here is I'm just going to end it off saying to close out expenses to income summary. Okay. So here's a list of all of my expenses, okay? So I need to compute what my grand total expenses are. So if you want to, if you've already calculated, good for you. If not, I can always double check. I'm gonna do equal sum, okay? All right, it's a quicker way to be able to get all your list of things that you need to total up. And I get a grand total of expenses to be $15,349.27. Okay, $15,349.27. All right, and I'm gonna plug that into my income summary. Okay. Okay, in this case, I'm debiting 15,349 and 27 cents. Okay? So if you did your formula, okay, you should get, let's see what the account balance is going to be. You should get a difference of $13,530.47. And you know what that is going to equal? It's going to equal what your total profit was, which is the $15,530.47. So in this case, that means when we close out our accounts, we did this accurately and we did it correctly. We got the same exact amount of income right here, right, of $13,530.47 income on income summary as well as our income statement. Okay? So that means the next thing I got to do now is, well, the rule is after you've closed out all of your income or your revenues, you close out the income summary and then you close out all of your expenses to the income summary. You need to now close out your income summary to your equity because that's what you have to do. We're going to reinvest that money into our company. So therefore, the next thing I got to do is I need to transfer this total amount of money into my equity. So if I currently have a credit balance in my income summary, how do I zero out this account? What do I have to do? If I currently have a credit balance in my income summary, how do I zero that out?
You debit?
We need to debit the income summary and then we're going to credit our equity. Okay? So in this case, we have a positive number, or we're going to increase our equity here. Okay, so here we got the income summary of, we're going to debit it for the 13,530.47. Okay? And we're going to credit that to my income to my owner's equity. I'm going to close it out to equity because I reinvested the money into my equity. Okay? And here, my note here is to close out income summary to equity. All right, you can also put to reinvest into the company, to reinvest the profits back into the company, whatever meaningful description you want to put here. All right, so in this case, I've already completed half of my ledger posting here. I'm going to debit this for the 13,530.47, which is going to give me my account balance to 0. Okay, and I'm going to go ahead and credit my equity by the 13,530.47, okay, which should give me an account balance of $43,530.47. Okay, so I closed out my revenues to income summary. I closed out my expenses to the income summary. And then last but not least, I need to close out my income summary to my equity. Okay? We still have one more account that's still open here. So we still have to also close out anything that is contributing to my equity, which I have an owner's withdrawal. This is money I took away from my company. I also have to add that back in there because this is something I did in June. I need to close that out because right now my equity does not equal $43,000. I need to take out the money that I took out during the course of the accounting cycle or the accounting period, which in this case I took out twice $1,500, both in the middle and towards the end of the month. So in this case, I need to close this out as well. Okay, so I have currently a debit balance in my owner's withdrawal, so therefore I need to credit this account. And if I'm closing this out to my equity, that means I'm going to decrease my equity, right? We decrease my equity by debiting the account, okay, for $3,000. And we're going to close out my owner's withdrawal with a debit, with a credit. Owner's withdrawal is account number 32,000. Okay, and I'm going to close out $3,000. And my note here is to close out owner's withdraw to equity. Right? And look, what do you know? I reached the end of page 25. Okay? And I'm going to add this in here. So I'm going to close out my equity account. For $3,000. Or sorry, I'm going to close out my owner's withdrawal. And I'm going to close it out to my equity now. In this case, I debited. So owner's withdrawal. Which decreased my equity, right, by $3,000. So therefore, my total equity balance should be now $40,530.47. And where does this match up? This should match up your statement of owner's equity. Right now, you currently have $40,530.47. Okay, there it is. It matches $40,530.47, which means I am matching all my numbers. Everything is coming together, and I am done closing my entire books. Okay? So now that I guarantee that everything matched up and my equity is equal to my equity, I can go ahead and put in my last little bar here saying I closed out my books. Okay. Okay. Close books. Okay. And now that I finished closing my books out, right? Everything equaled up to everything. Last step of the accounting cycle is to do my post-closing trial balance. Now, how I do the post-closing trial balance is going to be fairly easy once again. Since my balance sheet, right, I've mentioned this before, my balance sheet is very, very similar, right? It has all of my assets, it has all of my liabilities, and including my new equity. That is also the same thing as if you were to have your debits and your credits. So that's why I format it this way. So then All I have to do is just transfer it over into my post-closing trial balance. Now what I'm going to do here is, instead of having to copy and paste everything over, I'm just going to make a copy of it. So I'm going to delete this. Okay? And I'm going to make a copy of my balance sheet. And I'm going to put it right here at the end of, or right here at the very end, okay? And click OK. So here I have a second balance sheet here, and I'm going to rename this as my post-closing trial balance, okay? I'm also going to rename the worksheet because I have to reformat the way my worksheet looks like, right? So I have to rename this to say it's post-closing trial balance. The date is correct. Okay, I need to have a debit and credit column. Okay, I need to get rid of this total here. Okay, I also need to get rid of this total here, so I can delete that. And I can also get rid of this whole entire section right here where it says total liabilities and equity, right? And then I just plug in my formula to show what I want to see here. So in this case, I need my total debits, okay, equaling my total credits, and boom, there you have it. That is your post-closing trial balance using main accounts, and make it that much more easier to transfer all the information over. So in this case, this is the end. This is my post-closing trial balance. I got all of my assets, my liabilities, and my equity, because in this case, I don't have any more income and expenses. I closed them all out. All I have left is just my owner's equity. And my owner's equity was $40,530 and 47 cents. So that is it. This is the complete ending of Coffee Cafe. Any questions?